Welcome back to the channel. Today, we're diving into the top 15 assets that are making people rich right now. Everyone wants to know the secrets to building wealth. What are the best investments? What are the strategies that actually work? Well, the truth is, it's not about secrets or shortcuts. It's about understanding the fundamentals and making smart, informed decisions. In this video, we're going to break down 15 asset classes that have the potential to generate serious wealth. We'll talk about the pros and cons of each, so you can decide which ones are right for you. Now let's get started.
Real estate has been a cornerstone of wealth building for generations. It's a tangible asset you can see and touch, and it can generate significant income through rental payments. That's passive income, a powerful tool for building wealth. Over the long term, real estate tends to increase in value.
When you invest in stocks, you're buying a small ownership stake in a company. You share in their profits and growth. Think about companies like Apple, Tesla, or Amazon. Their stock prices have skyrocketed, making early investors wealthy. The stock market can be volatile, but over the long term, it trends upwards. Do your research, invest in companies you believe in, and hold on. Time in the market is more important than timing the market. Start small and increase investments as you gain confidence.
Cryptocurrencies have exploded in popularity in recent years, and for good reason. They offer the potential for massive returns, as early adopters of Bitcoin and Ethereum can attest to. But let's be clear, cryptocurrencies are also incredibly volatile. Their prices can fluctuate wildly, and there's always the risk of scams and hacks. If you're considering investing in cryptocurrencies, it's essential to do your due diligence. Research different cryptocurrencies, understand the technology behind them, and only invest what you can afford to lose. For those willing to navigate the risks, the potential rewards can be significant.
Chapter 4. Bonds, the steady eddy of investing. Bonds are often seen as the more conservative cousin of stocks. When you invest in bonds, you're essentially lending money to a government or corporation. In return, they promise to pay you back the principal amount plus interest. While bonds may not offer the same explosive growth potential as stocks or cryptocurrencies, they provide something just as valuable: stability. Bonds tend to be less volatile than stocks, making them a good option for investors looking for more predictable return. If you're looking for a relatively safe and stable investment that can generate steady income, bonds are worth considering.
Chapter 5. Mutual funds, investing on autopilot. Mutual funds are a great option for investors who want to diversify their portfolio without having to pick individual stocks or bonds. Essentially, a mutual fund pools money from multiple investors and invests it in a diversified basket of assets. One of the biggest advantages of mutual funds is that they're managed by professional fund managers. However, it's important to note that mutual funds do come with fees. If you're looking for a hands-off approach to investing and want to benefit from professional management and diversification, mutual funds can be a solid choice.
Chapter 6. ETFs, the cool kids on the block. Exchange-traded funds, or ETFs, share some similarities with mutual funds. They both offer diversification and can track a wide range of assets, such as stocks, bonds, or commodities. However, ETFs are different from mutual funds in one key way. They trade on stock exchanges just like individual stocks. This means you can buy and sell ETFs throughout the trading day, giving you more flexibility. ETFs have become incredibly popular in recent years due to their low costs, flexibility, and tax efficiency. If you're looking for a cost-effective and flexible way to invest in a diversified basket of assets, ETFs are definitely worth exploring.
Chapter 7. Gold, the OG safe haven. Gold has been a store of value for centuries. It's a tangible asset that has historically held its value, even during times of economic uncertainty. In fact, many investors turn to gold as a safe haven during periods of high inflation or market volatility. Now, gold isn't likely to make you rich overnight. However, it can act as a hedge against inflation and protect your portfolio from major losses. If you're looking for a long-term store of value and a hedge against economic uncertainty, adding some gold to your portfolio could be a smart move.
Chapter 8. Art investing in beauty and value. Art can be a lucrative investment. Masterpieces can appreciate significantly in value over time. However, it's not for the faint of heart. It requires understanding the art market. If you're passionate and have the capital, it could pay off. Chapter 9. Collectibles, turning nostalgia into profit. Remember those baseball cards you collected as a kid? Or that vintage comic book collection? Well, those childhood hobbies could actually be worth a small fortune today. The market for collectibles has exploded in recent years, with rare items like stamps, coins, toys, and even sneakers fetching astronomical prices at auction. Investing in collectibles can be incredibly fun and rewarding, but it's important to do your research. Focus on niches you're passionate about, and learn as much as you can about the history, rarity, and condition of the items you're considering. The rarer and more sought after an item is, the higher its potential value.
Peer-to-peer or P2P lending platforms have emerged as an alternative investment option, connecting borrowers directly with lenders. This cuts out the traditional financial institutions, potentially leading to higher returns for lenders and lower interest rates for borrowers. While P2P lending can be a lucrative way to earn passive income, it's crucial to understand the risks involved. Borrowers on these platforms may default on their loans, potentially leading to losses for lenders. If you're comfortable with the risks and are looking for higher potential returns than traditional savings accounts or bonds, P2P lending could be worth exploring.
Real estate investment trusts, or REITs, offer a way to invest in real estate without owning physical property. REITs own, operate, or finance income-generating real estate. They must distribute 90% of their taxable income as dividends. This makes REITs attractive for income-seeking investors. REITs are highly liquid, trading on major stock exchanges.
Investing in startups is not for the faint of heart. It's a high-risk, high-reward game that can lead to massive wealth or significant losses. Just ask any venture capitalist. However, the potential payoff can be enormous. Imagine investing in the next Google, Amazon, or Facebook in its early stages. But remember, for every startup success story, there are countless others that fail. If you're comfortable with the risks and have a long-term investment horizon, investing in startups could potentially lead to outsized returns.
Chapter 13. Intellectual property, owning ideas that pay. Intellectual property, or IP, refers to creations of the mind such as inventions, literary and artistic works, designs and symbols, names and images used in commerce. Owning IP can be a valuable asset as it gives you the exclusive right to use, sell, or license your creations. Patents, trademarks, and copyrights are all forms of IP protection. Owning IP can generate income through licensing agreements, royalties, or even by selling your IP outright. If you have valuable IP, make sure you protect it and explore ways to generate income from it. Chapter 14. Private equity, the big leagues of investing. Private equity involves investing in companies not publicly traded on stock exchanges. Firms pool money from wealthy individuals and institutions to invest in private companies. It can generate significant returns, but is a long-term game. Investments are typically illiquid, challenging to access before the fund's exit strategy. Chapter 15. Commodities, investing in the essentials. Commodities are raw materials or primary agricultural products that can be bought and sold, such as oil, gold, natural gas, corn, or coffee. Investing in commodities can be a way to diversify your portfolio and potentially hedge against inflation. Commodity prices are influenced by factors such as supply and demand, geopolitical events, and weather patterns. You can invest in commodities through futures contracts, ETFs, or by investing in companies involved in the production or distribution of commodities. If you're looking to add commodity exposure to your portfolio, it's essential to understand the factors that can impact commodity prices and to carefully consider the risks involved. Thanks for watching. If you found this video helpful, make sure to hit the like button and subscribe for more content on building wealth. See you in the next video. Remember, building wealth takes time, effort, and a solid understanding of the different investment options available. Do your research, seek advice from qualified financial professionals, and never stop learning about the ever-evolving world of finance. The more you know, the better equipped you'll be to make smart financial decisions and build a secure financial future.